Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is October 12th, 2019, and this is the weekend market review where we take a look at markets from various different sectors and study equity markets, study the fixed income markets, study volatility, commodities, and try to gauge where the markets are headed based on where the markets have been using technical analysis. And largely, we look at weekly perspectives. So longer term, this is not day trading advice. As many people would prefer to see a day trading uh, website, this is not it. But what this aims to do is to have long-term trend analysis where you can identify sectors that are breaking out or on the verge of breaking out and capitalize on those opportunities. And hopefully these videos go a long way to helping you achieve your portfolio gains. So first of all, I wanted to point out that these charts that I'm going to be looking at today are weekly charts, so longer term perspectives. However, if you go here on the technical corner through Moniology.com, you'll find that I've updated the market trends that have various different indicators, and I try to update them every Saturday night with daily charts. So it gives you a little bit closer and shorter term perspective on the market. So let's take a look. So here's the 10-year U.S. Treasury, and before I go through them, all of these individually, I'll point out that on Tuesday I posted a midweek review video, and that was for the premium subscribers. And in that video, I pointed out that the markets had set up a very, very nice positive divergence, and as they were sitting on, many of them were sitting on 200-day moving average support, and that midweek review was based on daily charts. If you read the headlines in the overall media, because Thursday, Friday, and Monday were all three pretty large down days in the market, and I said this looks to me like a fake breakdown, and it looks to me like the markets may recapture some of this downside and really break out to the upside. I felt, based on various different analyses that I did, that the markets had a lot more upside potential than downside. Certainly at that juncture when S&P was close to 1850. So here we are. The markets rallied pretty substantially, far more than even I had anticipated. And here's what they're showing us right now. They're showing us that they want to move significantly higher. So barring any serious negative news that it's obviously unexpected, I think that the markets are set up for an upside breakout, led largely by commodities, base metals, and frankly, interest rates are going to be moving higher. And it's going to take a lot of market participants who are anticipating markets really taking a hit. I think that's going to take a lot of folks off guard, and a lot of times you have these CTAs, these trend following traders. They're positioned to the downside right now, and with all this volatility, many of them have been stopped out of their trades. But if the markets break out above that 13 or 2310 on the S&P, I think you're going to see a lot of momentum swinging back into the equity markets, in both U.S. domestically as well as globally, and I think you're going to see some really powerful gains because a lot of folks are positioned to the downside. So with that said, let's take a look at the individual charts. 10-year U.S. Treasury. Notice the double bottom, but significant positive divergence that was created last week. We finally had the follow through that I was talking about. Obviously, there's still a lot of work to be done, but I think that this is set up for a rally at a minimum to 2.1. So right now we're at 1.75 on the 10-year. A move to 2.1 would be pretty substantial in terms of percentage gain. I think we can move all the way to 2.5, if not higher, to 2.6 before this leg of the rally is over. Dow Jones 2,500. These are the largest 2,500 companies in the United States, and still in this technical downtrend, but we found support at that 50 RSI. We back tested. We've got the 13 and the 26-week moving averages serving as support, and I think we're close to that breakout. It hasn't happened yet, but notice here that PPO is still in negative territory, but that means that it hasn't been able to create new momentum lows here. And so these oscillators, they just seem like they're just setting up the stage for a break to the upside. Here's copper. I call it Dr. Copper because it's a very good barometer on the overall state and health of the economy. And I pointed out that there's an inverse head and shoulders taking place here. Closed the week above the 13-week moving average. We closed the week having bounced off of that upper trend line of support in RSI, and it looks like it's heading up for a upside breakout. Notice PPO has already broken out above zero, so a stock like FCX, Freeport McMoran, would to me seems like a really good bet given how far it's fallen. If you watch our copper premium video, we had some really good opportunities that we've highlighted, and I encourage you guys to consider a monthly premium subscription, if not an annual one, and you'll see some of these names that we're highlighting in the more premium videos. But copper is definitely a name that I expect, or a sector I expect, to be taking off to the upside very, very soon. Emerging markets, EM ETF. So this is a symmetrical triangle. Seemed like it was kind of a fake breakdown here, but again, an inverse head and shoulders setting up here, and we're above this downtrend right now. And now it obviously needs some work to do before I can say that this is a true breakout. But this is what breakouts are made out of. They're made in skepticism and pessimism, and that's what we have right now in the markets. And if this breaks out, I'd say at above 43, you're gonna see a really relatively rapid move toward that 51 level. So PPO is now above zero. That's another arrow in the bullish quiver. Here's gold. So gold's taking a hit a little bit with some of the positive price action that we've had of late, and frankly, this is healthy. Obviously, if you're in some of the junior mining stocks, that's a pullback that's been a little painful, but that's where you take some percentage gains off. If you had 30, 40, 50%, sometimes 100 and 200% returns, and use these opportunities to add to your position. Alternatively, you can hold on, and yeah, these swings can be volatile, but if you're buying into a good high quality company, they're going to do well even during these pullbacks. So right now, this is the 13-week EMA around 1482. I think it's going to serve as relatively strong support. Where I think there's going to be more support is a 61 level right here. We're not quite there, so there might be just a little bit more downside in gold. We'll cover that in a premium precious metals review to be posted tomorrow on Sunday. But I expect the 61 level to hold, and I think ultimately break back up to the upside, well above that 1540 area. So it might take a couple more weeks because PPO now is firmly in the negative. But I think rest assured that precious metals are very much in a strong bull market. I don't think we're going to break far below that 1480 area, but it's possible. I would say probably 50% probability this area approximately holds. If that breaks, then I think I'd say about 75-80% probability that 1420 area is going to serve as very strong support, and we're not going to go lower than that. Anything is possible, but that's where we are right now. High yield junk. So junk is very interesting because it's a credit barometer on what's happening in the economy. And I was a little bit concerned as this was kind of breaking down here, but it found support at that 61 level, which is critical. It's found support before, and it's bouncing off that 13-week support as well. PPO could not break into new multi-month negative territory, and it's bouncing right now back above this trend line. I think junk is signaling a resumption of the bullish trade. You'll see it here on the daily chart. I've got the credit conditions indicator. The daily chart looks really good right now. Housing index, very much in overbought, but very extremely bullish zone here above 69. That's very bullish. And so long as it stays above that 13-week moving average, which continuously moves up, I think housing is strong and another barometer on the overall economy. Here's crude oil, and crude oil right now is still on a weekly chart, is still in negative territory, still below the symmetrical triangle breakdown. However, you look at here on the daily, and crude oil is acting relatively strongly. It's perhaps this was a fake breakdown, and now it's about to recapture some of its bullishness. I think tomorrow I'm going to be making a video on the oil and gas sector, another premium video, and I'm going to point out that we're very, very close to a very, very, very good tradable bottom in oil and gas. And again, sometimes when you follow markets from longer term perspectives, it might take weeks, if not months, to see the trend transpire that the charts are showing you. And folks can get frustrated, and that's why I recommend investing in either high quality companies that can withstand the volatility, or ETFs, because you're investing in more diversified names, so you're not seeing 70% drops if the markets pull back 5%, and that's why. But overall, I think that there's a huge opportunity in oil and gas right now in the energy sector. It's really setting up nicely. Nasdaq is found support off of the 26 EMA here, now well back above both those moving averages. Still not above this new downtrend here in RSI, but it found support at the 50, and there's really no reason to think that this can't go higher and break out to all-time highs above that 83.30 area. Here's the Nasdaq equal weighted, just to show you. This one is weighted by the top 100 names of the Nasdaq index, and it's not top heavy. And it looks like it's just going to continue its uptrend. I don't think it's breaking down anytime soon. Okay, a couple of ratio charts. 10 to the 2-year. This is the yield curve, and notice again the yield curve, the 10-year versus the 2-year, is starting to make a move to the upside, significantly so, and I think that's a very bullish sign for the overall economy. There's still this downtrend that it needs to break out above, but right now it back tested the 50 RSI successfully, and I think it's going to be moving higher very soon. Junk to the high credit or quality credit ETFs, and this shows you we had a triple bottom here with positive divergence on every single one of those support levels, and it looks like it wants to move higher. Again, another very positive sign. We broke out above this downtrend, and now we're making a run back towards that 50 RSI level. I think that's a very positive sign for the overall economy. The small caps to the S&P, the Russell 2000, we broke out of this downtrend. I pointed this out, this downtrend since July, where the small caps underperformed pretty substantially so. And we broke out of this back in September. Now we back tested both in RSI as well as price. And now it looks like it's the small caps are ready to break out above, not above, but rather against the S&P 500, a very bullish indicator as well. The long-term Treasuries against inflation protected. So typically, if the markets are setting up for a bearish environment, equity environment, this indicator will break out to the upside. That's kind of what was happening here. However, we double topped with negative divergence. I pointed this out in previous videos, and now we're breaking down. That's a very bullish indicator for the equity market. So PPO is breaking down below zero here, setting up for a breakdown, and I think that you're going to see a move at least towards this 115.5 level on this indicator. The consumer discretionaries against the staples, you want to see this indicator break out if you're an equity bull. And so far, we found support. And now let's see if this trend line breaks to the upside. I think it will. And if it does so, that's another bullish step in the markets. Another point I'll make is PPO here is in making lower or higher lows here. and despite the double bottom, we had a positive divergence here, and I think this indicator is setting up for another bullish checkbox, if you will. Russell small caps. Um, Even though they're below the 13 and 26 week moving averages, I think a breakout here would be very bullish. It's very close to a breakout back above this trend line here, which would be a breakout above the 50 RSI. And if it does so this week, this would be very bullish for the overall equity markets. S&P 500 equal weighted, very close to all-time highs, which tells you that the overall breadth of the S&P 500 is very strong right now. Found support at that 50 RSI and looks like it wants to move higher. Here's the S&P that's not equal weighted, so it's heavily influenced by some of the top large cap names like the Apples and the Amazons and the Facebooks of the world. And this one has bounced off the 13-week moving average, and despite being below this trend line, I think there's enough evidence to suggest that suggests that this likely breaks to the upside sooner rather than later. Here's the regional banking ETF, and fortunately for this sector, it's found support here below the moving averages, and now it looks like it wants to curl back higher. Again, a bullish sign. Semiconductors broke out right here out of this brief downtrend. So despite this bearish wedge that's being created, I think that given this breakout here in momentum, I think the likelihood is we break out to the upside rather than to the downside, but time will tell. Here's the SPY. Well, again, just very close to that upside breakout. Total stock market ETF, similar type of chart, found support at the 50 and now curling back higher. Let's see if it can break out. Dow Transports also found support here. Couldn't even hit those triple bottom lows. So there's quite a bit of support on the transports, and it looks like it wants to break higher here. The U.S. dollar, well, so this is important. U.S. dollar showed negative divergence, so double topped around that 99 area. Momentum couldn't follow suit. This could be a fake breakout here and a breakdown here. And you notice we've already broken down below this uptrend that developed since June. Broke down last week over here. And if we break below these support levels, I think the U.S. dollar is toast. And I think we're going to make a move towards that 92 area, if not lower. And when that happens, I think you're going to see that upside reflationary breakout in commodities led by precious metals. Vanguard ETF for the developed markets, VEA, notice breaking out to the upside here. Very bullish development. It's already breaking out here on RSI, and you got PPO. So you've got a number of bullish factors here that, again, point towards that upside breakout in the equity markets. Volatility Index, on the other hand, is breaking lower. Closed the week below the 50 RSI level, below this trend line, albeit slightly so, below the moving averages, and it looks like it's about to break below zero on the PPO. So a move towards 12 is very likely, and then perhaps even a breakdown below that level would not surprise me at all. Finally, two more charts. Wilshire 5000 looks like it's setting up for that move higher, and I think that's it. I think I removed the global market chart in exchange that for the EEM emerging markets. I just thought it represented what I was looking to accomplish better. One more thing, guys, here through Moniology.com. If you go to the fundamental zone here, it takes a little time to load, and I apologize for that. But first of all, I've got some really cool data straight from the Federal Reserve. And so I don't update it as often, but these are great. If you're interested in any of these indices, you can always look them up through Google. Just type this in. They'll come up. They'll be updated. And these are great fundamental resources on what's actually happening in the markets, minus all the noise that the media tries to spin. But these ETF trends. So This is live data from a Google spreadsheet that I've put together. And basically, you see that technology, real estate, utilities, consumer staples, all of these have done exceptionally well this year. But what's lagging right now? And that's energy and financials. I think here you're going to find some really good opportunities. We'll cover those in the coming weeks ahead because these areas are, in financials, for example, will benefit from higher interest rates. That I think that's going to happen. That's where you want to look at financials. Energy, well, if the economy, global economy, picks up steam, I think energy is really going to pick up steam as well. Look at Greece. I mean, it's absolutely been killing it. 39%, followed by Canada and the Russia and then Canada, and so a lot of these names are tied to oil, energy, tied to commodities, and so you're finding these here, despite the energy sector being fairly weak, at least in the U.S. So look at those, and while I'm not recommending to chase, this is why these sort of ETF charts are valuable, because it shows you, well, maybe India is a place to look at. If energy starts picking up, perhaps Mexico, which has not been performing well, can really pick up steam. So here are some commodities. Look at nickel. Nickel's up 63% so far this year. Over 3 years, 148%, and I think it's just getting started. Nickel, we've covered some of the stocks in the sector. I mean, Garibaldi, Giga or GIGA Metals is another one. There's some larger names, of course. You know, the BHPs of the world, the Glencores, that the Vale that have assets, and then there are smaller names like Grid Metals that I think that will benefit from an upside breakout to these. Here's gold, obviously done fairly well so far this year. Palladium up 34%. I think you're going to find that some of these sectors, aluminum, I think, copper. Take a look at steel. Those sectors, lithium, uranium. Both of these are tied to the working group. I think if you're going to find these two ETFs are on the verge of a major breakout. If they can break out and confirm this, quote unquote, on the verge, and actually break out, there's some great opportunities. Check out some of our past videos, and we're going to do future premium videos on these two sectors. So bottom line is there are a lot of great opportunities. Don't always chase. Look at the sectors that have been hit and find those opportunities to the downside that can really reverse course, because that's when some of the best gains do occur, as took place in precious metals earlier this year. Anyway, that's it for me, guys. Stay tuned for a couple of videos to be posted tomorrow, and then I'm off the grid again Monday and Tuesday. I'm going to return Tuesday evening, but hopefully we'll have plenty of content to cover tomorrow. Take care.